Hello, and welcome back to Explain the Charts. Today, October 14th, we're going to do a deep dive into the S&P 500, specifically the SPY ETF. As we can see from the headlines, the S&P 500 has been making record highs, driven by strong earnings from banks, particularly JP Morgan. This positive news has been fueling a strong bullish sentiment in the market, and we're going to see if the charts reflect this optimistic outlook. Let's start by examining the daily chart of SPY. We can see that the price has been steadily trending upwards in recent weeks, and it has broken through several resistance levels, indicating strong bullish momentum. There's a clear uptrend, but let's analyze if any support or resistance levels may hold the price in place. Here we see a strong support level around 420, which the price has bounced off of several times in the past. If the price were to pull back from these highs, it would be important to watch this support level. As a break below, it could signal a shift in momentum. There's also resistance at 440, which is the previous all-time high. The recent break through this level suggests a potential for further gains, but it's always a good idea to watch for potential pullbacks in the price. Now, let's move to the 1-hour chart to get a more granular view of the recent price action. Looking at the 1-hour chart, we can see that the price has been consolidating slightly after its recent breakout from the previous all-time high. The price is currently trading above the 20-period moving average, which is a positive sign for bulls, and there is no clear sign of any significant reversals. It's worth noting that there are several long, green candles in the past few days, which suggests sustained buying pressure. However, if we look at the candlestick patterns more closely, we see some signs of potential exhaustion in the recent price action. The recent highs are not being surpassed, and the wicks on the candles are getting shorter, which could indicate that buyers are losing steam. This pullback, although not a significant one, is a reminder that markets are always dynamic and we should never take any trend for granted. It's crucial to constantly monitor the charts and news, as even a subtle change in the price action or market sentiment can signal a shift in the trend. The recent positive news about bank earnings could provide further support to the market, but any negative news, such as a disappointing economic indicator or geopolitical event, could trigger a sell-off. To gain an even closer perspective, let's switch to the 15-minute chart. On the 15-minute chart, we can see a lot of short-term volatility. It's quite clear that the price is moving up and down quickly, which means that there are lots of traders trying to get in and out of the market. Despite this volatility, we can see that the price is still holding above its recent support level. This suggests that the bullish trend is still intact, but it's important to be aware of the increased risk of short-term fluctuations. Let's focus on the last few hours of trading on the 1-hour chart. We can see that the price has been consolidating around the 576 level. This is a key area of support and resistance, and it's likely to be the battleground for bulls and bears. This horizontal line is significant because it has been a point of both support and resistance in the past few days. If the price breaks above this level, it would suggest a continuation of the bullish trend, potentially moving toward the 580 level. However, if the price breaks below this level, it could signal a shift in momentum, potentially triggering a sell-off and pushing the price back towards the 570 level. Let's summarize the key price levels and potential scenarios for SPY. In the short term, the 576 level is crucial for SPY, as a breakout above it could lead to further gains, potentially towards the 580 level. However, a break below this level could trigger a sell-off towards the 570 level. In the long term, the 420 support level is important to watch, as a break below it could indicate a significant shift in the trend. The 440 resistance level is also a key price level to monitor. If the price were to reach this level, it would be important to assess whether the market has the strength to break through it or whether it will encounter resistance. Ultimately, the SPY's trajectory depends on a combination of factors, including news, market sentiment, and technical analysis. The positive news about bank earnings and the current bullish trend could continue to drive the price upwards, but it's always wise to be prepared for potential reversals. Keep a close eye on the market news and the charts, and remember to always use risk management strategies when trading.